This is where, as everyone joins us, we have a massive show ahead of us. Ladies and gentlemen, welcome. Welcome. It's with pleasure that I welcome to you to Chewing the Accounting Fat, our next episode. It's episode 8. And as funny as it is, it's the 21st of October. And firstly, a massive welcome to my co-host, Jason Cunningham. Hello, mate. How are you?
Mate, I'm spot on, to be honest with you. I'm a bit up and about today. So there's a bit of a spring in my step because we know that 11:59 tonight, us Melburnians, we come out of lockdown. And as everyone's very well aware, you and I have been strict adherence to the rules imparted on us by our fearless leader. So, you know, I haven't seen anyone. I haven't got to the office or done really much. So really looking forward to getting outside, Jess.
Yeah, I do like the way that your home office looks with that view over Princess Park, but it is
very similar
home office.
It's the background.
Talking about lockdown, I know we're getting out of it. I'll introduce everyone to our panel very soon as we let more people in. We've got a huge amount of people joining us today, so I'll give everyone another 30 seconds or a minute to come in. Mate, lockdown, we're in Melbourne. I know Warwick's in Melbourne. I know Glen's just out of lockdown. I know Eddie's actually, I don't know, he's in Canberra. I'm not quite sure if he's out of lockdown yet. We'll get to him in a second.
Yep.
What are you looking forward to, mate? What are you looking forward to the most, Jace?
For me, I guess I've spoken about this a fair bit. One of the challenges, and I think we've learned a lot about this hybrid workplace where we can spend some time at home and some time at work. But one of the big challenges that I think our organisation, a lot of businesses like ours have missed out on is that incidental collaboration, that accidental collaboration. Has anyone worked on this file? I'm doing something with a property developer. What about this? What about that? We've missed that, our organisation. And so I'm really looking forward to that sort of participation happening again, and as a person that's sort of somewhat inept when it comes to technology, I guess I've taken a few rungs. I've gone up a few rungs of the ladder, so I've got a little bit better, but I'm actually dying to communicate and press the flesh.
Yes, very true. Very true. Now, a quick little announcement, I'll say. I'm a parent at home with 3 boys, so we are still homeschooling. We've still got another week of this to go. So there's any chance that any of them could walk through. So this is live, so just a bit of a heads up. So anything can happen with Jason, as most of you guys would know. So I can't really determine what can happen with my boys. Now, there's a couple of things I'm going to share very shortly. We're going to do a quick live poll very quickly with everyone that's joined us. Plus, I also want to share with you, there's our chat bar at the bottom. There's our Q&A as well. So if you've got any questions throughout, we've got time to take questions at the end of this session as well. We're going to talk to you, everyone, today about mastering advisory as a service. And I think it's an important topic as, I did a podcast yesterday with a guest as well, and we spoke about the importance of having, I'll call it conversations with our clients. And in particular, I know, Jason, you're the practitioner as well. So, people that we spoke about retail and hospitality and tourism and how they could be probably the hardest hit. So how do you start having those conversations with clients to potentially stop them from going into administration, insolvency, bankruptcy, those sorts of things? So we have a massive guest panel today as well. So let me just stop sharing for a tick. And what I'll do is, there we go. We're still recording, which is really important. So yeah, you're going to have the Q&A, and you've got the chat bar as well there. So we've had some fantastic conversation in the chat bar. So continue to use that, please. Now, let me introduce you our panel before we get into today's show, and I do a quick little poll with everybody. Now, we've got experts in our field, and I've probably carefully picked all these guys. I've known each of them for quite a while, which is fantastic. Like Jason and I have known each other for 20 years. We're showing a bit of age here, Jason, maybe me more than you. But I'd like to introduce you to Glen Frost. First of all, Glen, I've got Warwick Cavell, and I've got Eddie Senatore as well. Gentlemen, welcome.
Thank you.
Thank you, Paul. Thank you. So we've got Warwick's in Melbourne, we've got Eddie in Canberra, and we've got Glen in Sydney, all well represented on the eastern side of the board. So for anyone in the west, we apologise. We'll do our best next time to get someone on from the west. So guys, we might just run around quickly, do a quick run around the Zoom room, let's call it. And maybe I'll just allow you guys a quick 30 seconds to maybe introduce yourself and share your level of expertise so everyone knows who you are. Glen, you want to go first, mate?
Sure. Thank you, Paul. Joining from Sydney. I'm actually out at a client for the first time in 4 months today, so I've got a meeting straight after this. I'm a partner in PwC's private clients practice. I've been there for 32 years. Started in business services, then transferred into tax, and I now run our family office practice nationally. In terms of sort of advisory services we provide, I run a program called Advisor Connection, which is supporting 1 to 5 partner accounting firms. We do a lot of work with family office setup and reviews, a lot of tax work, and in the last probably 18 months have done a lot more succession planning as a specific standalone advisory offering.
Brilliant. Thanks, mate. What about you, Warwick?
Yeah, okay, thanks, Paul. My name's Warwick Cavell, FCA, and started my career in one of the big 4, big 8 then, that's dating me, but then moved into a mid-tier firm and then set up my own accounting practice, working with SMEs for about 8 or 9 years, and then took up a position with a mid-tier chartered accounting firm as a partner in there, and then decided to get out of accounting altogether. And ever since, I've been focused on sort of strategy work, facilitation, and working very much with SMEs. And my business is profitable conversations. So it's picking up what I've learnt from working and watching accounting practices, and also with management consultants, how they create value, and listening to the conversations and working through and really encouraging practices to have different conversations with their clients, and how the current conversations are really limiting their opportunity to provide value.
Yeah, well said. And I think, knowing the amount of work that, since we've known each other, the work that you do with a number of different firms and the success that you have with that, I think it's in the branding, I think the rebranding, I suppose, maybe 2 years ago, 3 years ago, when you went on that profitable conversations, and it's about how you can have a conversation. And I think a lot of the firms that we've worked with in the past, they struggle to start to have that conversation. What do you start talking about? So we'll be sharing a fair bit of that today as well, and we'll be picking your brain on that. So that I look forward to. And Eddie, how's Canberra suiting you, mate? Are you out of lockdown?
Yep. Thanks, Paul. Thanks for the opportunity. I'm out of lockdown now for about a week, which is good. I've been training back on the paddock, actually coaching the elite women's soccer team down here in Canberra, which has been good to get out in some sunshine and have conversations, and being challenged by aspiring female athletes. So very good that we're out of lockdown. I've got a same sort of history as combined with Glen and Warwick. Started in the Big 8 with the infamous or famous Arthur Anderson firms, and then sold out, started my own practice, and then sold back into one of the Big 4, and survived there for half a decade. And now I'm back out in sole practice again. 30 odd years plus as an insolvency practitioner, seen a couple of recessions. And I spend my time now working with accountants, doing change management for their clients or with their clients, and also slowly building out an advisory business. So plenty of conversations in those 3 decades.
Yeah, brilliant. And again, another layer. And look, we haven't had 3 of our panel members on, Jay. So again, we'll try and be short and sharp with everyone today. We're going to try and provide you with as much information as possible. I'm hoping everyone knows Jason Cunningham from the practice. Jason, do you want to just do a quick shout out?
Yeah, hi, I'm Jason. Yeah, so we run as I would describe, a large small firm. We have a presence in both Melbourne and Sydney. We've got about 50 team members in Melbourne, and 10 of us are in Sydney. This is our 24th year in practice. I met PJ probably 20 years ago when he was working with GPL up in Brisbane, Vegas, or the Gold Coast, where PJ was, get the white shoes and sort of loafers sort of behaviour going on. Really worked a lot on his stand, and Paul used to be one of our business coaches, and had an amazing impact on the start of the growth of our business. And so, yeah, I'm really keen to have this yarn today, because my role at the practice is head of business advisory. And I guess one of the first questions I wanted to ask the panel, who've got a lot more experience than I do, is, what is advisory in your world? And I'm keen to understand, because I think advisory can have different connotations and different definitions. And I'm also interested in the piece that's the theme that's come across, which is the whole, we've got to have conversations. And where the dichotomy exists with having conversations is that typically the accountant by nature is not strong at having conversations. And so, if you were to throw a blanket across the accounting community, a lot of us are introverted type people, and we're a little bit we look backwards instead of looking forward. So I'm keen to ask those two questions. If I can, I might start with Frosty. You see, I've just leapt into the nickname sort of behaviour there, Glenn. Glenn, tell me what's your definition of advisory, and what's your take on the whole conversation piece?
Yeah, I would say I used to define advisory as solving complex problems, and I now just define it as solving important problems, because they don't have to be complex. They just have to be important to someone, and they've got an issue and they want someone to solve it. And so that's either you've got something that can solve it, or you know someone that can solve it. So to me, that's sort of the advisory piece. And then absolutely the conversational piece. Most of my work is just discussions with people, particularly around things like succession planning. It's just trying to unearth what the real issue is, and that is just a conversation. Most of our clients aren't sophisticated, so it can't be too technical, which is what we like to default to. It's chewing through the issues with them.
And do you feel that that's let's call it the number one skill to have?
Yeah, I think there's a couple. The one that goes to accountant's skill set is project management. Like, you do actually need really good project management skills for an advisory assignment, and accountants typically have those. But then you also need this listening skills, the ability to communicate clearly to someone who's not a technical expert. The other issue I see is that people solve problems, but they can't articulate the value of what they're solving, so they can't actually get paid properly.
You know what I enjoyed about that, PJ, was the piece that Frosty mentioned about either solving the problem or knowing someone that could solve the problem. And I think sometimes we get a little bit caught up in having an expectation on ourselves that we need to be able to have the ability to solve all the problems, and we can't. If we're doing that, then I think we're kidding ourselves. And when I talk about advisory, the first thing that, because we've all interviewed candidates, and today's market and young kids wanting a job or whatever, often the reason is they feel like they've hit a ceiling in their current employer and they want to do a bit more advisory, right? And I'm like, so what's advisory, right? This is the first question that I ask, right? I'm keen to understand what their interpretation of advisory is. And for mine, at the base level of advisory, the first thing as an accountant, this is my view, and I'm keen to hear from Warwick and Eddie as well. But mine is just touching on what you said then, Frosty, is the interpretation of the financial statements in a language that our customer understands. And too often the accountants that are coming through university don't even understand the relationship between an income statement and a balance sheet. And they don't understand that the income statement, it says, for the year ending 30th of June, 2021, yet the balance sheet talks about as at a point in time. And I think that is the fundamental component to build a foundation on advisory, because at the end of the day, we're putting together a set of numbers. And if we can clearly articulate what has happened throughout the period, the year, the quarter, the month, and then the impact on the balance sheet with the assets and the liabilities, I think that's a good place to start. I think the second thing, one of the things that we talk about in our organisation is we base our advice based on our experience as opposed to our opinion. And I mean, we live in today's world, and last 18 months, everyone's got an opinion about COVID and the coronavirus, right? And everyone's got their opinion, right? We're a bit too quick to leap onto other people's opinions, and we live in a world where we love other people's opinions. Back in the 18, 24 months ago, when we used to travel, right? And we'd get on a website called TripAdvisor, and we'd take advice from somebody in Auckland about a person we've never met before about which hotel to stay in Paris. You know what I mean? Because that's the nature of who we are. And I find that somewhat intriguing. And yeah, what's your position there, Eddie?
My position on advisory, I'm going to take a totally different slant on this.
Thank you.
I don't have any definitions and no framework. I see advisory as dealing with a business or an individual that's sitting here, and needs to get to here.
Yeah.
That advisory piece is those dots that need to be joined to have that journey.
Yeah.
And so that's where the advisory aspect, the way I see it, the advisory aspect comes in, is to having those conversations, collecting the evidence, because that's what you're talking about, is where do we get evidence to start forming decisions about which way to go? Much like experimentation, the aim, the methodology, what's the outcome, what do we start tweaking? I think the key takeaway for me is getting comfortable with the emerging nature of the environment you're in and being comfortable with the chaos. And it's like me being on the side of the pitch when the girls are playing football and halftime comes around and it's not quite going to plan. What am I going to talk about at halftime? Where are they at? Where's the game plan? How do we get those dots connected?
Yeah.
So I like to be as flexible as possible. When it comes to numbers, it's the last thing I look at. I try to have the conversation in my mind, guess where the business is at before I look at the numbers. And then I test myself at the end saying, well, I was close or wasn't close.
Yeah. Just a side note there, Eddie. You seen Ted Lasso?
Yes.
Yeah, you're the Ted Lasso of this conversation.
Yeah, actually, thanks. I'll take that.
Yeah,
I'll
I know. How
take
good is he? So we'll just get back onto accounting. Sorry about that, Ted. And you, Warwick, what's your position?
Yeah, look, I go along with Glen's definition. I quite like that, important issues, and also Eddie's joining the dots. But one of the things I often do with accountants is sort of try and put it into a metaphor or a way of understanding business advisory services versus the normal accounting and tax services that are provided. And I say, look, imagine someone pushing a ball up a hill, a big heavy ball, trying to push it up the hill, right? Do your services actually help that person push the ball up the hill? Or are your services only the chock under the wheel that stops the ball from falling back down?
Yeah.
And my argument is most accounting services are the chock under the wheel. Very few accounting services, business advisory services to me actually help the client push the ball up the hill.
Yeah, right.
And, you know, so to me, a lot of our compliance-based services are simply stopping the ball from slipping down.
But surely there's value in that, Warwick. Surely
I'm not judging that there's value, but if that's all you do, then you're missing a pretty big slice of potential in that client base. Wouldn't you agree?
Yeah. And I do agree, and I reckon there's a lot of people on this show today that are keen, that sort of maybe understand that metaphor that you've shared with us, but now are looking to say, well, okay, that's great. Thanks, Warwick. Some big words you've used there. How do I implement that into my practice?
Well, one of the things you spoke about before, Jason, you know, the implication here is you're solving two different sorts of problems. And what people aren't really understanding is there's quite a big difference in the conversations you have depending on the problems you're solving. Yeah. If you're solving technical problems, then you need an expert, right? If you're solving adaptive challenges, you don't need an expert. Now, the conversation you were having before is one, either we solve the problem for them or we refer them out.
Yeah.
Well, what about the third option, which is the biggest option of all, is what about co-creating the solution with the client?
Yeah, I was going to say.
What happens if the client is the expert in their business? I was approached by a client many years ago in my accounting practice days and asked me the question, should I keep importing garments from China? And I go, shit, you're asking me, I'm only an accountant, how would I know, right? So I went through a process with them, did the pros and cons. When I ask accountants, you know, how would you answer that question? They say, oh, I'll do a costing on it. But how do you know it's a costing issue?
Yeah.
But you haven't even had the conversation with the client and you're already jumping into treating it in the way you want to treat it. So what are all the pros and cons? And we went through that process. What are all the reasons why you should import? What are all the reasons you shouldn't? Went through that. I didn't offer any advice at all. And the client looked at that up on the whiteboard and said, geez, I see what you're saying. This is brilliant. I've solved the problem. You've solved the problem. And I'm going, I've got no idea what I've solved. Now, you know, for me, we're missing those opportunities.
To be honest with you, I guess that's the way we run our business advisory solution for our customers, is that we're pretty clear that they're the experts in their business. And what we do is we help them facilitate and make decisions. And we sort of facilitate that. So I think that's in a similar vein to yourself.
What we're missing is that I think that with technology, as technology starts to, you know, AI and stuff like that, you are going to find that technology will solve more and more of the technical problems. Right? So the biggest proportion of problems that we're going to have to address are what's called adaptive challenges. And adaptive challenges aren't solved by experts. So if we're stuck in expert conversations, then we are limiting our value to our clients.
I guess that's one of the benefits of being an expert in nothing. You know. So let me ask you. So getting back to, so appreciate that, Warwick. Thanks for that. Getting back to, how does one go about implementing or starting an advisory arm to their practice? Because a lot of people on the call are public practitioners, and I've got a couple of questions around. One of my old business coaches spoke to us about the importance of, when you're building your business, you need to look at product development, marketing, sales, fulfillment, and support. Just that whole, horizontal view of your business. And I'd say to him, what do you mean product development? He goes, well, in the accounting service, in the professional services business, he argues that what you should do is bundle up your services and have them as like a product, and have them as like a menu of services, which then comes back to this: how do we price our services? Because, and I'm keen to understand, one of the biggest challenges that we have as accountants is, we don't want our clients to have a surprise, and we don't want to just run a timesheet and build up the WIP and then throw out an invoice. A lot of our small to medium-sized businesses want to have an understanding of how much is that going to cost. So can I ask the panel, how do you go about pricing and setting up pricing for this advisory piece? And I'm happy to start with you, Warwick, since I've just had that conversation with you. And
just a couple of points, Jason. I would argue against the approach that you just outlined.
Yeah, good.
I don't think that and this is where I think a lot of accounting practices. I'm a contrarian, so I'm going to pick some of these and see. I think that the way the profession is going about it at the moment is not the most productive way to do it. We're starting with the product. We're saying, a business health check or whatever it is. Here's the product. Now I've got to flog it. Well, now you're selling product. That's not what a trusted advisor should be doing. To me, you start with the client. You're either got a product looking for a problem, or a solution looking for a problem, or you start with the problem and find the solution. I think too many accountants start with, we need to get this. So we spend 6 months learning this financial health track, blah, blah, blah. And then we got to flog it to the client. No, stop. You've got a meeting with a client next week. Next week. What are you going to do in that meeting? How is the conversation going to change? Let's talk about that particular meeting and how that conversation. Don't worry about your products and services. Let them sit in the back room.
So what are you saying, Warwick? We just sit there and we just do it for free?
No. We don't do it for free. To me, you don't go there and make a big hullabaloo. It's not about, in the first instance, creating a business advisory division. It's about having a conversation. I'll give you an example. A firm in Parramatta the other day, when I'm coaching them, I sort of said to them, okay, tell me about one of your clients. You've got a meeting coming up next week. So he told me about the client. I said, they got a problem. The daughter's taken over the business from the father. It's a concreting business. And they've got problems with a couple of their key employees won't get vaccinated. And this is causing contractual problems with the builder. And I said, okay, is that where they want to start the conversation? And they said, yeah. Well, don't provide them with solutions. Just talk them through. So he started to talk them through. She was doing it hard and started to talk them through, not providing advice, not providing solutions, just how are you tackling it? What are you doing? What are the major issues? Blah, blah, blah. And suddenly, a problem shared is a problem half solved. And so straight away, she started to think differently. Then he said to her, well, what other problems you got in your business? He's built the rapport. She gave him about 12 or 15 problems that she was struggling with. He then just turned around and said, well, if you could only solve one, what would it be? Now, he's getting paid for this live now because it's just a normal meeting that he's in. And then he sort of said, okay, so that now he's got about 5 or 6 meetings now logged up with her to work through the next 12 or 15 issues that she's got. Then he says to her, well, look, I'd normally do this on a fixed fee basis, but would you like me to, let's do it. I'd suggest we do it on an hourly rate basis for the next couple of meetings. She was fine with that. There was no fee resistance whatsoever because the focus wasn't on the service. The focus was on the value of the problems being solved.
I appreciate your point. So you're sort of talking about identifying the problems, having conversations with the client, getting them to buy into the fact that we're in a solution-based problem-solving position, and then we talk to them about fees. Can I get, Frosty, what your opinion is?
Yeah, it does depend on whether you're talking to new clients or existing clients.
Yeah.
So for an existing client, we'll often, schedule in meetings, say quarterly, and just say to them, look, tell us about what's happened in the last quarter and what are you planning for the next quarter, and things will evolve from there. And so there's no product that we're selling at that stage. However, when it's a new client or we do have some products that we're trying to sell, then it's a different approach, because generally they're coming to you because your marketing has worked, been a referral, and so that's a slightly different approach then, because they're coming with an issue. Still the same warning signs though, in that it is important you don't solve the wrong problem. That clients don't often know what the issue is, and generally they're terrible. I mean, accountants are bad communicators, but so are clients. You've got to spend some time making sure that you are solving the right problem. And in terms of pricing, I do tend to phase my pricing, in that a lot of these assignments, it's really hard to work out exactly where they're going to go. So we'll do, phase one, there's a definite fixed fee. That's what we think based on our experience. When we get to phase 2 and 3, we'll come back to you and let you know, because we'll get a more informed view of what's going to be. But I'll also sort of say to them, look, based on my experience, this is, it's closer to a 10 grand job than a 100 grand job. Or it's closer to 50 than 5. So don't waste each other's time if you're not pay 40-ish, So trying to give them some sort of scope, but knowing that it's a rambling conversation, so the time is going to be hard to quantify.
Yeah, thanks. And Eddie, your views?
My view is very similar. I'd just like to, I suppose, start this intro with thanking Warwick for his definition of this adaptive challenges framework. I think that's something that's slipped under the radar, and I think it should be elevated. So if that's one takeout, this framework of adaptive challenges, for me, it's about making a choice. If you're doing advisory, you've got to make that choice. We're going to be in advisory. So what does that mean? What does that look like, depending on what definition you take? Then it's about having that conversation and being skilled at listening, not necessarily talking. And for me, it's quite, if I go into a meeting, I'm asking open questions. So some of the Indigenous work I do is, where you're from. So I start work, so get their background, their family background, the part of the country they're from, or it's how's business. And I'm looking for green lights. It's tough out there. It's not like it used to be. What does that mean? And start really breaking down and having that conversation. I think it's then trying to work out this question of price or value. Are we selling the drill bit, the hole in the wall, or the fact that the person that's done that can boast they can hang fine art? Where are we at with that conversation? The value end is being able to boast that you can hang fine art, and that to me is, you can pick your price depending on what you're talking about. So if it's a sales problem or a growth problem, or I want to sell my business in 5 years' time for $1 million, well, what's that worth to you? It's not hourly rate. But if we're setting up systems so you get ready for sale, that might be the drill bit plus a hole in the wall, so it's hourly rate, possibly. Don't know. But I try and pitch it to, where's the value here? I'm then saying, what's that investment you're prepared to make to get that outcome?
One of the first things, Jason, that I think is exactly what Eddie said, is to, what is the value to the client? Not what is the cost to the client, but what is the
all
value.
Day long.
And so you're sort of sitting there, and I don't think we're very good at that. We sort of sit there and we don't. And Eddie made the comment there that it's $1 million. So what is this? We've got to quantify what it's worth. What will this enable? If we fix this problem, what will it enable you to do or do better? And let's quantify that. Let's not as directly I've just expressed it there, but let's sit with the client and try and work out what it would mean. Oh, gee, we could fix that, this would mean this and this and this and this. And okay, well, let's talk about, so we're really checking to make sure it's worth doing, one, and two, then we quantify it so we know what the benefit is. And then very roughly, I encourage people to, I tend to work very roughly on a 10 to 1 ratio, so that a 1/10. So if it's a $1 million type benefit, outcome, then I'm sort of saying really it's going to be about $100,000 over time to do that, because it's that 10 to 1. If I'm if it's 13, 14 to 1, then I'm too cheap, right?
Yeah.
And if it's, you know, and so on. So you sort of, that's just a rough rule of thumb that I use. Now, but to me, fee resistance has not been a big issue with clients because they're hooked into the value. They're buying a better version of themselves in the future, and that's massive for them. And your fees are quite incidental if you've quantified what that better version is.
Yeah, that's the investment. I think Warwick's just nailed that whole proposition. If it's worth something to them, it's, you know, what investment you're prepared to make to get to that. I don't think it's not a fee.
One of the things that Glenn mentioned that I really took out, Janso, was the difference between the existing client and the new customer. And I think that, you know, if you've had clients, and a lot of people on this call are practitioners that have been dealing with the same client for 10, 15, 20 years, 5 years, whatever, and you've been engaging with them this way for the last 5 or 10 years, and then you look to engage with them differently, I think that's a different conversation than the new client that's come in, that's been referred to you by a client who has experienced your business advisory offering. I think the way you attack it, I think it needs to be different. And so I appreciate that, and I appreciate everyone's commentary on it. Can I talk about so a lot of this sort of advisory work in the public practice space tends to get done by the principal or the director or the most senior team members in the organisation, because one of the things that, you know, all the partners in accounting firms are running their own business anyway, whether it's their own business or in partnership with 2 or 3 or 4 or 5 others. So you can talk to experience from running your own organisation. You can talk about, you know, the 4 key pillars of a balanced scorecard: your people, your processes, your customers, and your financials. You can have those conversations. One of the challenges that exists is when we run our business like a pyramid. When we do that, then everything is stuck with us, right? You know, and you know, I participated in a lot of these conversations, and often people say to me, Jason, compliance is dead. And I go, well, I'm sorry, I don't see that. One of the things that I love about compliance is that you can push it through the production line. And now I'm talking like a business owner, where I can create efficiencies through technology and through, you know, processes and systems to really drive the profitability of our organisation, because that compliance work comes in and pays the rent and pays the wages. And then the sexy stuff, if you want, or the exciting stuff, where you provide value to your customers in the advisory. But what happens when it all is stuck with you? How has anyone, Frosty, can you talk about some of the things that you guys do where you can pass that sort of work down the line for 2 benefits? Number one, to free up the principal or the partner's time, but also give the team members more exciting and more challenging work.
Yeah, I guess getting the right staff is important. So we tend to pinch your staff, Jason.
Yeah, you do, you bastard, and I'm not happy about that.
That seems to help. So they're obviously having the right staff, but a lot of what we do is not as difficult as what we think it is. And therefore you can actually chunk it down a little bit, and you can't throw a manager a complete advisory assignment and then say, look, go and do what I do, and then let me know how it goes. You can chunk out 10% of that. And I did a succession planning assignment recently with a senior manager, someone who's CA qualified and probably got about 4 years, still a long way off partner. They were able to step into the succession planning. Probably they did about 35 or 40% of the assignment. When I started, I thought I'd give them 10%, but as they kept doing more and more, they actually got it really quickly. And if you give them a little bit, they will generally take a lot, and you can sort of, edge your way through getting them more and more involved. But it is it's a leap of faith. They're generally keen to do this, so they're willing to sort of invest their own time. This manager sort of did her own literature review beforehand, was sort of asking the right questions, and then we had a framework. So how were we going to go through it? Accountants love project management frameworks, so we were clear on who was doing what, and then it just evolved.
And what it does, what I've found is that when you provide in the marketplace at the moment, it's practically zero unemployment for accountants, and it's really hard. And as you rightfully said, and I appreciate your honesty, you're running around stealing all of our employees. So thanks very much. We put the time and energy and we train them, and then you guys pinch them and give them 20 grand more. So that's really nice of you to do that. So thanks. And that's on
Nice,
behalf of
nice
everyone.
of you too. Nice of you.
Yeah. One of the things it does do is provide career progression for team members. Peter Mogg, a mate of mine, just jumped on the chat bar and he said, how do you truly systemize this process so that effective delegation can occur? And I think that in itself, that question is somewhat of a dichotomy. Particularly if I pick up, what Warwick was talking about and Eddie, which is around having conversations and let the client diagnose the problem. It's somewhat hard to systemize that, but I'd be interested in everyone's take on that. And are there ways where you can systemize it? Frosty?
Well, just before you throw to Eddie and Warwick, do you have any of your team members in these conversations with you? Because the best way for them to learn is to see what you're doing.
Yeah.
And then something that we're not as good at as we should be, which is before the meeting, setting out with them, right, I think this is how the meeting's going to go. Yeah. I'm going to run 80% of it, but I want you to try and, when we get onto this topic, you jump in and see how you go running that and give them a little bit of, it's training wheels.
Can I just say before I jump on to Warwick and Eddie, that's a cracking bit of advice. And as I heard you speak, it's something that I don't do enough of, but I could see it's that small little, the first 15 minutes, and then also the last 15 minutes post the meeting as a bit of a debrief, that learning. And when we talk about L&D in our organisation, a big part of it is L&D on the job. Yeah. And, because we've had these conversations 1,000 times or 2,000 times, so we can walk into a client meeting somewhat blind, although for any of my clients that are on here, I'm definitely doing a lot of preparation, right? We can walk in somewhat blind because of our experience. It enables us to be able to do that. But, a younger team member coming in that's excited about this opportunity to spend that first 15 minutes or 10 minutes or half an hour and then the debrief, that's good stuff from you, Frosty. So that's one after you've pinched out, you've got a few more to give back, Dave.
The way I express that to them is say to them before the meeting, don't be the hi bye person, which is at the beginning of the meeting, they say hi, and at the end they say bye, and then in between they say nothing.
Yeah.
And they've got to have a role somewhere in the meeting.
I really encourage my team members to interrupt me at any point in time. And as I said to you off air before we went live, I said, typically for people that know me, where there's a void, my voice tends to fill it. So I'm not going to don't wait for me to pause, just jump in there. Eddie, what's your view, pal?
I agree with what Glenn just said there. I think there's parcels of any assignment that can be broken up and there can be exposure given to other people in your team. I think what we've got to realise, and Warwick started this conversation, is IT and AI are going to come into play. So we need to give our talented people something more to do than just overseeing AI and IT. One of the things I say to young recruits, particularly when I was a partner in the Big 8 and Big 4, was, listen, your advantage here is you're fresh. Yeah. You're not part of the dogma. You're not part of our way of thinking. So if you need to know something or you want further explanation, ask the question, because it might all stop us saying, well, why do we do that? And why is that important? And we start filtering that out. So definitely bring people into your meetings, give them slice of the work, allow them to have that connection with the client and allow them to express themselves, because that diversity is very important, I think, not to be afraid to ask the question, because it might uncover something.
And is that also a good opportunity, I suppose, Glenn, from your point of view, talking about making sure the client also knows there's other people, talking about almost building a service to replace yourself as well? Does that help?
Yeah. I mean, my clients sort of want to know that if I get hit by a bus or hit by COVID, that things will keep going. And so having them know that some of the other team is really important that work on their assignment. On some of the larger ones, we'll have two partners on there, and the second one won't really do much, but they'll be aware of what's going on. And therefore, if anything happens to me, they're able to pick it up relatively quick. It's not cold when they're picking it up.
Yeah. I think that's just as important, to make sure that the client understands that. So again, it's about that conversation that you'll be bringing in other people. But more importantly, some of the key things that I've written down here is making sure you're training those people, those other team members, to ask good questions as well and just uncover information.
Yeah. So the whole
part of
collaborative
that-
approach, it's that it's together, and that together can be a lot of players.
And part of that approach is also having those conversations internally inside the
Right.
practice. It's not just with clients. I mean, the partners that we've got to engage the staff members with these sorts of conversations as well, and ask them questions. You know, I always talk about mentoring. You know, if I take a staff member out to a client, I basically tell them they've got to ask me questions. They've got to ask me questions after it's over. If we jump in the car and go back to the office and I turn around and say, do you have any questions? And they say no, well, the mentoring's over. It's finished. You know, you've got to be inquisitive. You've got to be asking me questions, because that's when I know where your head's at by the questions you ask me. So I'll work through that. But I also go back to what Eddie was saying before. It's, you know, advisory services is the dots that join point A and point B. Now, some of those dots will be compliance work. It's not, you know, so when I have an advisory conversation with a client, I'm also generating a lot more advisory work, which is easy to delegate, right? So it's not all, we've sort of got this artificial, you're having a conversation with the client to solve problems. Those problems will be a range of services that need to be provided. And some of those services will be more compliance-based. And getting back to Peter's comment about how do you truly systemize, well, you can only systemize something that you repeat, right? So if you are finding that a service, a particular part of a service is being repeated time and time again with a client, then you can systemize that service.
And that's one of the things that we've done in our organisation, Warwick, is so, you know, when I spoke about earlier about a bundle of services, one of the things that we offer new clients and existing clients is helping them develop a one-page strategic plan. We've done that time and time again. We've got a price for it. We can understand. We know typically how long that process takes. We run 3 or 4 sessions that are 2.5 to 3 hours a session, a week or 2 weeks apart. We know what the fee for it is. We know how to punch it out. We bring in younger team members to play a role and not just a hire and buy, Frosty. And I think the other thing that Ted Lasso said, which I found really encouraging, was what the younger team member brings is their enthusiasm and their vigor and their youth. And I keep sharing with my team members, don't be me. Don't just copy what I'm doing. Don't try and be the you know, another Jason Cunningham in the room. You've got to be you and bring your game. Because, you know, when I talk to business owners and when I talk to our team members in our organisation, one of the things that we focus on in our business is trying to glean best practice from other industries. You know, often, you know, there's a report that bounces around the accounting industry called The Good, the Bad and the Ugly. And we've probably all seen or heard or read about that. But that just talks about our industry. And I think there's other industries that provide best practice that are outside of our industry. And in Melbourne, us Melburnians, we love our sport and we love our AFL footy. But, you know, when I talk about elite sporting teams, Ted, and, you know, and whether it's on the soccer pitch or whether it's on an AFL ground or playing NRL or whatever they guys do up there in Sydney, there is so many things that we can glean from elite sporting teams that we are miles away from, not only in public practice, but in small business. And if you have a look at the elite athlete, she or he demands feedback constantly. How do I get better? How do I get stronger? How do I keep my spot in the side? You know, what do I need to eat? How do I need to train? What do I need to do? And the other thing that elite sporting teams do is everybody in the team, both on field and off field, everybody is crystal clear on what the plan is. And what the plan is and what their role is in said plan. And, you know, that's one thing that we are really good at as accountants. We are good planners. And so you take that skill set about the planning piece and then you overlay that with, you know, elite sporting clubs. And that's one of the things that we've done in our organisation to help people build a plan.
Yeah, I think this is some very key points in this. And for me, it's a head scratch. If I wait to the end of the season and my left back says, what do I need to do to get better and make the young Matilda squad? I'll say, oh, you need to improve your left foot. That's better off known at the start of the season. And it's similar with our businesses, right? We should have those, we're doing our annual review of staff performance. Well, why aren't we doing that daily? For my perspective. And also I find is the way we present information to our young athletes. I'm very keen on past sequences and where they break down. And towards the back end of the season, I produce this pictorial heat map. And the girl straight away says, oh, we're losing a lot of ball in the center of the park. Why is that? And we're having this conversation about why is it the center of the park and not the width of the park? Well, because there's more congestion, we need more skill, we need to practice our first touch. So it starts having this deeper conversation. If you present material, not just numbers, but in different ways, a lot of stuff to unpack in that, Jace.
So Ted, what you're talking about is actually providing advice based on data, right? And again, as accountants, we're pretty good at data, right? We're pretty good at numbers. And so you're taking, it's not just a gut feel and you know, and I'm Ted Lasso and this is what I think. You show them the heat map and say, this is what's going on. I used to work on sports radio, SEN in Melbourne, and I got to know a lot of AFL footballers and coaches and coaching staff and all that sort of stuff. And, you know, you'll often hear a coach of any side, one of their strong senses is that they are very good at excluding outside noise. And often they don't even worry about the scoreboard. You could see a side that's 10 goals down or 4-0 down at halftime or whatever the sport is you're playing. And they're not looking necessarily at the scoreboard. They're looking at their KRAs or KPIs or their indicators, you know, inside 50 contested ball, meters gained, all that sort of stuff. And what they do is they focus on that because they know that the scoreboard will look after itself in the end. Yeah, whether that be the growth and the profitability of the business or whatever that is. And sometimes, Warwick, you got to spend a lot more time on the foundation before you get the end result. And so there's a lot of work you're doing and you feel like you're not getting, and the client's not getting much traction, but you know that if we get all these things right and make a few slight little tweaks and changes, once you get a bit of momentum, often it's an exponential sort of impact once you've got through the desert, so to speak.
Yeah, agree. Guys, I've got a question for the panel. Now, in a quick poll just then, we saw that 20% of everyone attending here at the moment isn't offering advisory as a service, 80% are. So for those people that are not and they're considering it, we're about to move into 2022, where do they start? And I know, you know, sort of Warwick, you've mentioned, let's start having a conversation. I think, Glenn, you said the most important skill was listening. But where do they actually start? You know, is it creating a list? And I suppose you hit the nail on the head as well, Warwick, saying we can only systemize it if you repeat it, which is great. So, but where do you start? If you're looking at this, and yes, I need to listen. Yes, I need to ask questions. What's keeping you awake at night? What does that mean? Where do you start?
So I'll just jump in quickly on that. And I'd say, just going back to base zero, it's making the choice that that's what we're going to do. Now, what does that mean? Well, we're going to need these resources. Well, if we take these resources out of the practice, how does that impact on our current practice? What do we need to backfill to make sure all that runs smoothly? So that's base zero. Make that choice and then start from there.
So a business strategic decision that this is what we're going to offer.
Make that choice and then say, what does that mean? So who do we need? How's that going to come out of our practice? Do we need to invest? Do we need to invest in people, software, and all that background, and then just get into it?
I would add to that, reflect on what you like doing and are there assignments that you've particularly enjoyed that you would be willing to invest some time in? Because I think added to Eddie's point is don't dabble in an advisory product. Like I see a lot of people dabbling and it never goes anywhere. And so there does have to be a bit of a leap of faith where you invest some time. You do your research, you convince yourself it's something you like doing and you think there's a need there, and then invest the time to work out how you're going to deliver it. And that could be the bottom 20% of your list, transfer the key relationship to one of your managers and just say, I'm not going to work on those ones because they're going to get some skills and what you'll find, there's probably some advisory assignments in those that you've just, got bored with. But you need to then redeploy that time and actually invest some time. And again, because accountants love, and I'm an accountant at heart, and I love, project management, when I'm working on something new, I'll set aside 3 hours every Wednesday afternoon and just block out my diary and just go, I'm going to spend some time doing this, because otherwise my week gets filled up with everything and 3 months go by and I haven't done anything about this new thing. And so I just need to focus. And it's a bit like, once you get a bit of a roll on, then you get, and then the other bit aligned to that is do it with someone. That I find when I do something by myself, it never gets done. Whereas as soon as I bring in a couple of junior people, another partner, I'm working on something with another investment advisor at the moment. Just the fact that he's involved is keeping me honest, and I'm keeping him honest, and we're actually making progress.
Yeah.
I'm going to sort of give a different view than that. I mean, some of the things I agree with what Eddie and Glenn have said, but I think it's a lot simpler than that, in the sense that we live in an age of startups. We're in the startup age now, and we talk about minimum viable product. And if you're running a startup, the place you go, and accountants are very, very busy people. So my view is that if you start to say, well, you need to do the research, you need to invest time, you need to do all this sort of stuff, it will never happen, right? Because most accountants are just too busy, right? So it becomes a could do rather than a should do or must do. So my suggestion is work with what you've already got. So to me, test the market first. So the first thing you're going to need to do is we go back to conversational skills. So you have a meeting with a client next week. Let's talk about that particular meeting before we even get to hotspots and ratio analysis and all the numbers. Let's treat the person as a person. Let's just start the conversation and see where it goes. Find out what the hotspots are. Find out really, and as I said, that example of that Parramatta firm, the woman at the end of the meeting just turned around and she said, that's why I changed accountants, because she'd only just moved to this particular guy. She said, now I know why I've changed the accountant. And he said, why? He said, I could never have had this conversation with my previous accountant. And then she just reflected and she said, in fact, I could not have had this conversation with anyone else, not even my father who set the business up. She said, you're the only person that's been, and you listen to what the other person says. People like you because you take an interest in them, and to me, the first step is to take an interest in your clients. It's not extra work. It's not setting up extra meetings. It's not having to go and research and spend 3 months to learn another software package that you might then have to flog. It's about you've got a meeting tomorrow with the client. What are you going to do?
I'm not sure if anyone else can tell. I think Warwick's pretty passionate about this whole conversation piece. It's hard to tell. But I think, after a good 45 minutes or whatever, I'm starting to work out you're passionate about that, Warwick, which is wonderful. Can I ask a couple of other questions? And I wouldn't mind going to what Clint just put up on the board there. But two things I wanted to ask of the panel. For mine, somewhat selfish, if you like. How do you manage and deal with scope creep? And just that whole communication piece. And as Janto said, 20% of the attendees on this call don't offer BA or business advisory or advisory services. Is there, what would be the first port of call or first software piece that you would look at as something other than, the accounting software that we're currently using? I don't mind whoever wants to kick us off there.
Well, in terms of scope creep, and it'll sound patronising, but you can only deal with scope creep if you've got a clearly defined scope in the first place. The problem with a lot of advisory assignments is that it's really hard to know where they're going to go when you start.
Yeah.
So you do need to define the scope as much as you can. If there is scope creep, you need, and accountants, massive generalisation, love procrastinating, dealing with issues later. If there's scope creep, much better to deal with it sooner rather than later. Have a small problem rather than a big problem. And then ultimately it comes back down to value proposition. Why was the scope creep? What else? What have you done that has delivered more value? Because the client is going to see the fee, and what they're not going to see is the value.
Yeah.
And your job becomes articulating the value that justifies that additional fee. Because they can see the fee, they're really hard to see the value though. So you've got to work out what is the value.
Frosty, that's exactly the point that Clint Hayward just mentioned. He said, in my view, often the difficult part is convincing the client that it's an investment as opposed to a cost. Clients that are doing it tough, and there are a lot of clients out there at the moment that are doing it really tough, are quite reluctant to part with the dollars unless they can see the value, which can be a hard sell.
Can I just offer a different view, Jason? I mean, again, you know, I'm going to make myself a pain in the ass if I haven't already.
No.
That question just signifies to me you're having the wrong conversation.
Yeah, exactly.
Right. You're absolutely having the right. If you have to convince your client of the value of your costs, you are having the wrong conversation. And I sound like a broken record because no matter how many times I mention this, I find accountants just don't pick up on it. Oh, look, but it's real, Warwick. I have the trouble. Yeah, but you're having the wrong conversation. The client is investing in themselves. They're not investing in you. Yeah. You're incidental. You don't exist.
I think the penny's finally dropped for me.
Yeah,
it's taken me 55 minutes.
Saying, Jason, if I'm trying to work with you, then I'm going to engage you with your better self. So in 5 years' time, this is what you're going to look like.
Yeah. Now, the problem with that is I've been deteriorating over time, but I there's a bit of levity there. Warwick just having it. But I think the point that Warwick's trying to say is it's not necessarily about engaging with us and what I can do for you. It's actually helping the client be the best version of themselves and helping them articulate and solve the problems. So thanks for that, Warwick. I might jump to you, Ted.
So it's one of two things. Either the client's not ready to have that conversation and ready to get into that space, or you have approached it, as Warwick said, in the wrong way.
Yeah.
And so once again, I go back, you're not selling the drill bit, you want to get to a point where you're selling the boasting about how I've hung this fine piece of art on the wall and how I can show that off to whoever comes into my hallway or living room.
Yeah.
It's a different conversation. So you either have a client that's not ready for it or you just haven't approached it the right way.
Yeah. Yeah.
That's my...
Yeah. Sorry, Jason.
No, that's okay. I'm just reading what David Hobbs wrote. It's a great call about listening. The majority of communication issues in accounting are caused by people not listening, and therefore one or both sides don't understand each other.
Guys,
listening is a key skill. Listening is a key skill.
100%. To everyone that's listening right now, please drop some notes in the chat bar, in the Q&A. Unfortunately, we've got to lose Glen very soon. Glen's got a commitment at 1:30, so in a couple of minutes.
Yeah.
But I'm more than happy to take more questions because this is it's a challenge. It's not a challenge that's been around for a year. It's been a challenge that's been around for 25 years. Yeah. So probably even longer. I just wasn't in the industry before then. No. It's something that we need to get better at. I think our clients, Jace, we've spoken to Andrew Conray from the IPO with Kenny Wallop and the CPA. Yeah. The research studies that they've done is that clients are looking for this.
Yeah.
Yet we tend to maybe prefer to go in the background and get stuck into the compliance work with our heads down as opposed to looking up and going out and maybe talking to the clients about what's actually keeping you awake at night.
PJ, I think it's important to understand and recognise human nature. Change is difficult for all of us, right? And unless there's a compelling reason to change, typically we don't change, right? So people are, whether it's the way they run the business, whether it's the way they run the relationships, the way they parent, whatever, people generally don't change unless there's a compelling reason to change. In my experience, is human nature, right? I pick up the point that Frosty made a bit earlier, and he said, because sometimes there's this big myth or this veil across advisory and how complex it is, when it really, and Warwick's been saying it till he's blue in the face. We nearly lost Warwick there. We just got that wound up. I just thought, maybe just take a peppermint tea or a joint or something, just to sort of lower it down a little bit. But really, it is about having a conversation, and it's not really. We're not really, some of the advisory work that we do is quite complex. The tax advisory work's pretty tough, and that's where we bring in experts, PwC, when they've got a raft of experts lined up the hallway waiting to hit the timesheet, that's one thing. But for those of us that are in the smaller businesses, we can tap out to experts, and excluding the tax advisory stuff. I think that, it's really about having the conversations that are more than just compliance.
Yeah, brilliant. Look, I don't know if there's any more questions or there's a couple coming through here. Great suggestions from Pat Thatcher. He's actually in the West. So, mate, I mentioned the West before. So good to hear from you, mate. Great suggestions from all. So there's a few things coming through here. Just let's stay on top of them.
We talk about listening skills, and to me, we sort of put it in the one basket. But I think the intent behind the listening is also very important. So are you listening to diagnose the problem, or are you listening to understand the client?
Yeah.
Good point.
Yeah, in conversations, most people are listening for a pause so they can freaking speak. You know what I mean? Have you noticed that?
And that comes to the nature of the industry, problem solving, which is what we spoke about at the start, as opposed to listening and asking another question and helping them to come up with sometimes the solution to that. Where we
I am going to have to go, Paul, so I'm sorry.
Yeah, go, mate. Thank you.
Thanks, Frosty.
Okay, thanks, Warwick. Thanks, Eddie. Thanks.
Cheers,
But the expert conversation is very much ask, diagnose, tell. You go to a doctor, and that's the conversational structure. Asks you a question to diagnose what you have so they can tell you what you should do. Now, most professions are based on that conversation. Now, that's only useful if you're solving technical problems. It's a different conversation if you're solving adaptive challenges. And that's where I think the profession needs to start thinking and start moving.
Yeah.
Because as I said before, technology will start to address more and more of the technical problems that's been the foundation of the profession.
Yeah. No, it's a good point. Now we've just ticked over to 1:32. We have lost Glenn. Look, to everyone that's joined us, thank you. If there's any parting comments, I was about to call you Ted, to be honest with you, Eddie, but Eddie,
whatever works.
Exactly. Thanks, Chase. Anything you'd like to share, mate, in terms of a final comment, again, for people that maybe, obviously, it's funny how that 80-20 comes into play, doesn't it? Because that's exactly what our poll said. So again, 20% are not offering, 80, I think it was 81% are actually offering it, whether they're doing it well, but they are doing it. Yeah. Any parting comments, mate?
I'd just like to perhaps just let me throw out a challenge. In the next meeting you've got booked for your next client, just put away the numbers and let's have a conversation.
Yeah.
Just see how that goes. Because I think you'll find if you let that and it's got to be a genuine conversation where there's listening. Let's just see what comes from that. And I'd almost guarantee that there's going to be a whole heap of things in there that you can add value to.
You know what, Ed? I'm gonna take that advice on board. I've got a client meeting at 3:00. It's a difficult conversation I'm about to have.
Yep.
It's about the valuation of their business, and I suspect he thinks it's worth more than it currently is. And I'm going to have just a listening conversation. So, thanks to you, Ted, and Warwick's pretty much thrown that down my throat all day. But I'm a slow learner, Warwick, but once I learn it pretty good.
You're not alone, Jason. The profession's with you.
Now, to everyone that's joined us again, we have lost Glenn, but thank you to Eddie, thank you to Warwick. I think the chat's been fantastic as well. So everyone that's joined us today and been online and throwing comments and questions and thoughts and ideas, but again, do something is better than doing nothing. A bit like Jay said, he's got a meeting at 3:00 and hopefully he'll take that conversation differently. And it's a bit of a challenge for you, Jace, to listen. That will be interesting.
Oh, come on, mate.
Report back in. I thought every single one of us would love to know how that goes.
Yeah.
But Jason, thank you again. Great interaction, guys. Just another wonderful Chewing the Accounting Facts show. To everybody, we have our virtual lunch taking place in, I think, in a couple of weeks' time. I think it's Tuesday, the 9th of November. We're going to be talking about the 8 wastes of lean. Again, talking about efficiency, inefficiency. I've got a couple of fantastic guests joining me for our virtual lunch. So join me with a glass of wine if you are available. You'll probably have something in your email very, very soon if you haven't already. So to all you guys that have joined us again, thank you very much. To Jason, to Eddie, to Warwick, thanks, guys.
Thank you.
Have a wonderful afternoon.
All the best.
Thanks.
Yeah.
Thanks, gents.
Bye then.